All right. So yes, we're gonna start with the basics. I know pretty much everybody on the call already. So we're gonna start with the basics of buying or selling real estate. Try not to take too much time in there. But that is where I also go through the monthly market report updates as well as number two, going through using real estate as an investment tool. All right. So I would love to hear from you guys. If you could drop it in the chat. Why do you want to own real estate, or why do you need to own real estate? A lot of us on this call already own real estate. So if you can put in the chat, some ways it's benefited you, why you think it's important for people to own real estate in general. Would love to hear from you guys. Just go ahead and drop it in the chat. Some common benefits of homeownership today is tax advantages. You get to write off 100% of your interest you're paying on the property as a tax deductible expense. Appreciation is one of the biggest factors of today's market. Real estate is just continuing to get more and more expensive, and it's just hard to keep up with the cost of living without owning real estate. Adds to income, love that. Equity is another one. Your equity is able to be leveraged to do other things in your life. I mean, my mom always said she put me and my sister through school in property. Without that, I don't know what she would have done to come up with that money. We did get student loans and all of that, but she was able to leverage the equity in her home to make some of those larger purchases. And she's done it over and over with different things. Predictability, you get a fixed mortgage payment typically in today's market, whereas rent is going up every year, typically. Freedom, nobody can tell you what to do on your land, typically, unless there might be some restrictions with like HOAs or condos, but overall, nobody can tell you what to do in your house. There's no landlord telling you what you can and can't do, can't, whatever. You have that freedom to do what you want with your land. Stability, again, that consistent payments, and typically people are setting down roots when they purchase a home or real estate and that pride of ownership. I love that you said adds to income, because that's one of my favorite reasons to buy real estate. I don't know about everybody else, but my retirement plan is my real estate portfolio. When everybody else's income is becoming fixed and going down, my income should be going up. So looking forward to that down the line. And also, if you're not aware, the wealth gap is continuing to increase between homeowners and renters. I mean, in 2022, the wealth gap was almost $400,000 for the average homeowner versus the average renter. I mean, nothing else changes your wealth as much as real estate does for the average person. There's many other things you can invest in, but not many other things you can put, 10, 15, $20,000 down once, and it takes you back hundreds of thousands of dollars over the lifetime of the investment. We are expecting prices to continue to increase over the next 5 years. A home that was purchased for $400,000 in 2024, we expect to be worth at least $472,000 by 2029, and that's just with moderate appreciation. On the left-hand side of the screen, you can see the estimates so again, prices are expected to continue going up. For those who own real estate, that means your equity is going up. For those who don't own real estate, that means it's going to get more expensive for you, and you should be purchasing as soon as you're able to, just to get in the game. I know I'm moving a little fast, but feel free to hop in at any points. If you have any questions, comments, drop it in the chat. I know I'm moving through this a little fast, so we got a lot of things to cover. So,
Yeah, I think
equity in America.
if I could add in, I don't know if you're going to touch more on that, but going back to what Danielle was mentioning about home appreciation. On the flip side, people are probably asking a lot about what's going on with interest rates. I don't know. Are you going to touch on interest rates, or can I add a little bit of what I'm seeing right now?
I am going to touch on interest rates, but would love to hear what you're saying.
Well, from what I'm seeing, it looks like interest rates are probably going to stay pretty flat this year, unless barring any negative factors, sentiments like, a huge drop in unemployment or something. Interest rates are going to be pretty leveled out around the 6% range, which which means that, which means that real estate's still going to be affordable because 6% is actually pretty good historically. But I think that that's a big question that people are thinking, like, or wondering, as we're going through the year, what's going to happen with interest rates. And it looks like so far it's going to be pretty stable throughout the year with minimal increase as of right now.
Absolutely. We're going to get to that. Thinking about one or two slides, but thank you for adding that. And I would say that sounds pretty accurate, actually. But anyway, on this page, I'm just talking about equity in America. A lot of people are concerned about how much debt Americans have. We are actually at our highest level of debt of all time. As far as mortgages go, the total equity in homes is far greater than the total debt on homes in America. This is actually the largest volume of equity we've seen on record, and a lot of that is due to the appreciation inflation that we've seen over the last few years. You can see prior to 2015, this graph was not as sharply going up as it has in the last, 3, 4 years. But home equity is pretty stable. The average homeowner actually has around $319,000 of equity in their home. And that's just, that's including everyone, people who bought their home 30 years ago and today. So this is actually the largest volume of equity we've seen. In 2025 forecast, Sam, this is the chart. You see on the right hand side, you're pretty spot on with estimates being that home mortgage rates are expected to come down slightly, but remain pretty stable. Not last year, we were hoping for a bigger decrease, but based on the last couple market reports that have come out and the Fed's signals, it looks to be pretty stable for this year. We don't expect any major decreases. And Chin, if you want to touch on that with your insight, you know, let us know what you're seeing on your end.
Sure thing. Hello there, everybody. My name is Chen. I'm with Fidelity Direct Mortgage. I'm Sam, Danielle, and Melanie's lender partner. I've been in this business about quite a while, since 2005. So I've seen the highs, the lows, the sideways, and stuff like that. I came into this business when rates, quite frankly, were in the mid teens. So think about that for a second, right?
Right.
Yeah. Literally mid teens. Yep. But now I've also seen them when they're in the 2s and 3 percentile, right? So I've seen a whole swing. What I can say in relation to that is no matter what rates are, homes are still being bought, homes are still being sold. There were some people who argue that rates were high last year. I can tell you last year is probably one of my best years of my entire career because business is still being done, homes still being bought, homes still being sold. There are people out here who kind of look at things like that as a challenge, and then there are others who look at it as an opportunity, right? So yeah, I mean, basically, I look at it just control what you can control. The market is the market, rates are rates. We're not the Fed, we're not the government. We also don't have any say so or input on what global economic factors have happened, wars and things like that, right? I mean, sometimes you just wake up and things happen and it shakes up the market, sometimes in a good way, sometimes in a bad way. The other thing I can also tell you is that, from what I've seen in my many, many years of doing this, is that a lot of times that the uneducated or less savvy person would put a much higher weight on rates than they should. Because ideally, for example, when somebody asks me, hey, what's today's rates? Or what are your rates? Yeah, I've learned enough to know that they're inherently what they're asking me is, what is my payment going to be? Right? Because the rate determines the payment. You don't pay your mortgage with a percent sign next to it. You pay it with a dollar sign next to it, right? And an average 300 or $400,000 loan amount, a 2.25% or something like that difference in the rate might only result in a difference in your monthly payment of about 30 to 50 bucks or something like that. Folks, that is not a deal killer. Okay. The biggest determinant of your monthly payment, which is the thing that most people worry about, is what is my payment, is your purchase price. Now, when you stay on that, for example, being the biggest determination, it kind of tells you that you probably should get ahead of the curve when it comes to the price of the house. All right. I'm sure that you'll go into how home prices are going up. So the savvy individuals and people who are really in the know, hey, let me get ahead of the curve and get this house before prices go up, because that by far is the biggest determinant. So whether the government does anything with rates one way or the other, folks, that is probably number 3 on the determination of what your monthly payment is. By far, it's the price of the house and the amount of down payment that you're putting down. So I basically just want to caution people with that, because I've seen many times where people get laser focused and tunnel vision on what the market is doing with rates, and you miss the big picture. So I just want to caution people not to do that, because I've seen it time and time again where people do that and end up regretting it. All right.
Mr. Hood, I saw you had your hand raised. Did you have something you wanted to add?
No, I didn't have anything. I actually had a question for Chandler, and I appreciate that analysis. I'm one of those who's always looking at the rates. I'm always, because that means the money that I borrow. I'm looking at when I borrow money. I'm trying to get the best rate. So I just wanted to, and I get that, and I appreciate that conversation. Maybe I'll start looking at it a little differently. I would like for the rates to go back to 2.9 and down to 1. I would love that. But let me ask you this: you mentioned when the rates go up, some people look at it as an opportunity. Help educate me on that. I may be a little slow to this, but help educate me on how you look at that as an opportunity.
Sure thing. Great question, by the way. And I don't blame you for looking at rate as the big thing in front of mind, because that's almost what you're conditioned to do, right? When you turn on the radio, you turn on the news, it's all rate, right? Because quite frankly, that's a buzzword. Okay. Now, what I mean by opportunity is this. Now, I'll kind of give you an analogy of real life, what happened in the past, and how you can reference it of what's likely to happen going forward, right? If you kind of go back to when you mentioned what rates were in the 2s and 3s, probably referring to back in 2020 during the COVID years and such, right? All of a sudden, people woke up, market went down, well, for us, good, meaning rates dropped sharply, right? Now, what that created was a huge influx of buyers into the market, which to you means your competition, which to you means if you find a house that you like, where there'll be 2 or 3 offers on that home, in 2020 and 2021, there were a dozen offers on that home, right? So literally what happened is that the home that listed for example, $300,000, by the time whomever that won that contract, they needed to bid $375,000 to get that home, right? Now remember what I said earlier. You had John Doe, who has an interest rate of whatever, 4%, right? But their purchase price is 300 grand. And you have Jane Doe, whose rate might be even double that, but their purchase price is much lower, in a matter of speaking. That person with the lower price is going to have a lower payment. Now, here's the opportunity part, right? So, fast forward again, the people who bought their homes early in 2020. Now, all of a sudden, you have other buyers after you buying at much higher prices, which to you means that you're now growing a lot of equity in your home, right? That puts you in a perfect position to do what's called a refinance, either to lower your rate and payment or take some money out of your equity, do some debt consolidation or home improvement or whatever you want to do, right? So at the end of the day, you kind of just position yourself to get the home when the prices are low. It allows you to grow your equity in the meantime, and then you can refinance a lot of times in a short time period later back to a lower rate when rates drop. You win. It's a win-win. So that's what I mean about opportunity. Hopefully that answered your question.
Oh, yes, you did. Thank you. That was very enlightening. I think I need to come to more of these. Thank you.
Absolutely. Thanks for coming. And yeah, I mean, as soon as rates drop significantly, we are going to have an influx of buyers, which means more competition. So again, right now, when there's less people in the market and lower prices, because we know prices are going to continue to go up, that is the best time to buy. The best time to buy is always 5 years ago, but we can't time travel. So the next best time is today. But yes, as you can see on the screen, 2025 forecast at the top, I have mortgage rates are projected to come down just so slightly. I mean, you can see that chart on the right is almost flat. It's not a big, change we're looking at. But home prices are expected to keep rising at a more normal pace. Thankfully, it's not the same type of inflation we've seen over the last 3 years. But even typical inflation is 3%. I mean, 3% each year compounds. So homes are just getting more expensive. If you're going to make a move, the sooner the better. All right. On the next page, I think I have home price forecast. Yep. So you can see there's probably about 1, 2, 3, 4, let's say 10, 15 people here giving their estimates. We have estimates ranging from prices going down But most people are believing prices are going to go up. Average of all, this is 21 people, average of all 21 is 2.9%. So about 3% increase for 2025 is the forecast. And again, those are national forecasts. So I wanted to make this local for us. We are in the DMV. You guys know where that is on the map. The darker the blue, the higher the price increases we're expecting. So we are in an area where we are expecting prices to only go up. We're not expecting prices to fall drastically in any part of the DMV. Just so we're all on the same page. And I'll go into more local specific in just a second. Let's ask the question, you guys. Do you think we're in a buyer's market or a seller's market? Feel free to come off mute or drop it in the chat.
Probably in both.
Both, that would be a neutral market. And we're not, but we're getting close.
Okay.
Right now. Actually, I can't even say we're getting close. We are very much in a seller's market.
But it's trying to even out.
Yeah. So on a national scale, we are getting closer to a balanced market. It's a national scale. But as we get into the local numbers, you'll see seller's market is less than 5 months of inventory. In the DMV, we are barely scratching 2 months of inventory. So we are very much in a seller's market here in our local DMV. So the Mid-Atlantic region is all of these areas: Baltimore, Philly, Central Pennsylvania, Southern Maryland, all of these areas. We really focus on T metropolitan area, Baltimore metropolitan area, and Southern Maryland. That's just our focus, but I like to give this map because we are going to go over the Mid-Atlantic numbers very briefly. So overall, these are year-over-year stats. Closed sales have increased. Sold prices have increased 6.6% in the median. Is the increase in median sold price. So you can almost look at that as prices went up 6.6%. You know, we're looking at trying to get closer to that 3% number. But again, prices are only going up as far as we can see. Days on market is up only by 3 days. So 18 days on market for the whole Mid-Atlantic region is not bad. You can see months of supply only at 1.66 months of supply. So that is very much a seller's market. You guys can read the rest of the numbers here, but I have some others. I'm going to focus more in on the Washington, our specific market areas. So next we have Washington, D.C. metro. Closed sales is up 25% year over year for December 2024. Of course, we're in January, so the most recent numbers are from December. So we're up 25% in home closed sales. That's a big increase. Median sold price is up about 6.3%. Days on market is up just about 3 days, not a very big change. New pending sales is up about 3%. New listings is down, so a little less inventory, but still 2,126 new listings on the market for that month. 5,468 total listings on the market, which is an increase of 15% inventory. So that is a significant increase in inventory, and that is what's going to continue contributing to the stabilization of our market. More options for buyers on the market. But again, we're only at 1.3 months of supply, so it is very much still a seller's market. And showings were up by about 1.4%. And I'm going to go through these pretty fast, but please stop me if you guys have any questions. All right. So that was Washington, D.C. metro. That includes Northern Virginia, Prince George's County, Montgomery County, and D.C. This is just Washington, D.C. There was only 530 closed sales, which is not that many sales, but it's actually up 20% year over year. We are at 627,000 being the median sold price. That is not the average. That is just the middle number of homes that sold. That is up by 4.6% year over year. An increase of days on market by about 10 days. We're looking at a median days on market as 43 days. Pending sales were at 372 pending sales, which is slightly decreased. New listings have slightly decreased. Overall active listings has increased by 30% in Washington, D.C. Like that is a huge increase year over year for active listings. I mean, I know during the COVID years, a lot of people weren't moving, but what we're seeing is inventory starting to accumulate in Washington, D.C. So it's a great time to get into the city if you're not already here. We're at 3.64 months of supply in D.C. This is probably one of the highest numbers of supply I see in the DMV. still market or a neutral market is 5 to 6 months of inventory. So we're still in the seller's market range. But again, that's over a month of inventory more than last year. So the market has definitely slowed down a lot in Washington, D.C. Thankfully, there are more showings happening. So we see a 3% increase in showings year over year. All right, moving on to Maryland. I tried to do just areas that most of our clients are focused on. You know, we have a lot of people in DC, Anne Arundel County, and the next ones will be coming up shortly. So Anne Arundel County, closed sales have increased 23%. We're at 604 closed sales for the county. Median sold price is at 486,000. That's up 9.6%. Median days on market is at 14 days, up 2 days. Pending sales is at 460 sales. New listings is up 8.6% with 329 new listings year over for December, and a total of 606 active listings. So when those listings come on the market, they are selling. With our months of supply are at 1 month. Looks like months of supply has actually gone down in Anne Arundel County, showing just how competitive that market is. And we see showings have increased year over year, about 1.9%. Moving on to Prince George's County, closed sales is up 21% year over year for December. Median sold price is up 5.3%. We're at 447,000 for median sold price. Median days on market, we're at 22 days. Months of supply, I'll just skip to this. Months of supply, we're at 1.38 months of supply. So again, still very much a seller's market, seeing price appreciation. We're seeing that there's more closings than in the previous year, significantly more closed sales than the previous year. Showing surprisingly have gone down a little bit, but there's still 12,000 showings happening for just the month of December. That's a whole lot of people looking at that house. So even though it's gone down 7%, there's still quite a bit of activity happening there. And again, please feel free to slow me down if you guys have questions. All right, moving on to Montgomery County. So with Montgomery County, we are up 27% in closed sales with 766 closed sales for the month of December. Median sold price, we're at 615,000. So that is up 11%. That's one of our highest instances. If you look at percentage wise, great appreciation happening over there. Median days on market is up by 4 days, but 17 days on the market is still not a very long time at all. Months of supply, we are at 0.97, so less than a month of supply. And that's actually an increase by 0.15 months. So usually there's been less supply available in Montgomery County. There's only there's a total of 778 listings active at this time, which is a great increase of 23%, more listings than average or year over year. So we love that we're seeing more inventory on the market, but we're also seeing these homes selling very fast and for more money. And showings have increased by 2.8% year over year. And now moving into the Baltimore Metro. So that includes the city and the county. We'll go into both of those in just a second. But overall for the Baltimore Metro, we are seeing an increase in closed sales, increase in sold price, increase in days on market, but very little increase in days on market, just 2 more days. 1.53 months of supply is still very little supply. Seeing as 5 to 6 months means in neutral market. And we have 10% increase in active listings for a total of 4,000 active listings. 34,000 showings is a whole lot of showings. That's surprisingly a decrease for year over year. Like those main points from Baltimore Metro. Getting into the city, the median sold price was $225,000. That's an increase in 9.2%. So a lot of people hate on Baltimore, but prices are going up. We are seeing, in some years, we've even seen double-digit appreciation in the last few years, but 9.2% year-over-year appreciation comparing December 23 to December 24. Median days on market is up 7 days. So we're at 30 days on the market. Months of supply, we're at 2.86 months of supply. So that is a little less than 3 months. It looks like the supply has increased year over year. by active listings is 1,862. That's an increase of 9.7% year over year. So there are more active listings. Again, it's still a low number for months of supply. So still a seller's market. Notice how every market in our DMV area is a seller's market. There's no way around it. And the biggest factor on how the home sells is the condition of the home and the price. Those are the two number one factors. The homes that are not selling are either overpriced or they're in bad condition. Otherwise, these homes are selling fast. And then for Baltimore County, we are at wholesales have increased 11%, median sold prices increased 9.2%, median days on market has actually gone down, so homes are selling even faster. Active listings is up 17%, but we are looking at 1.28 months of supply. And that's an increase of 0.18 months, very little increase, but still very much a seller's market. And I think this is our last one that we're doing for, specific local data. Southern Maryland looks like there's no change in closed sales. Median sold price is pretty stable at 435,000 or roughly. Days on market has actually gone down. So we're at 21 days on the market. Active listings has gone up about 13% to 686 active listings total. And then months of supply, 1.65 months of supply is still very much a seller's market. It's gone down a little bit, but what this tells me is that Southern Maryland has just been very stable in terms of not having drastic inflation in prices. It's great for our buyers. All right. So I don't know what everyone's goals are here, but what do you need to do to prepare financially at